Please give me an example of a business that needs to determine their real revenue. Hi, Kelley Brubaker here from Profit Scale Thrive, where we guide attorneys to overflowing profits, scaled growth, and thriving lives with a profit first FAQ you can use. So, okay, let's look at an electrical contractor. For this example, let's use simple round numbers and say that the contractor has $100,000 in total income. Then they spend $30,000 in materials, which would be for their covers and outlets and stuff like that. $25,000 on subcontractors, which they would hire other electricians for certain projects for a variety of reasons. $11,000 on internal administration, $9,000 on vehicle costs, $8,000 on rent, and then with a take-home pay of $15,000 and taxes of $2,000, this electrical contractor would never have a profit. This means 55% of total income is being used for materials and subcontractors. So when deposits come in, they would go into the income account, and on the 10th and the 25th, 55% of the income needs to be allocated to a dedicated bank account for materials and subcontractors. The remaining 45% of total income would then be allocated to the profit first accounts. So the profit first allocations would be for profit first, owner's comp, tax, and operating expenses. For this example, let's say the allocation percentages are equal to your target allocation percentages, or we abbreviate them in TAPS in the profit first world. This means what should be happening is 5% of real revenue should be going to profit, 50% to owner's comp, 15% to the tax account, and 30% for operating expenses. But look what's happening here against actual cash flow from the information above. There's no profit. The owner's comp is $15,000, which it should be higher at $22,500. Not enough money is being allocated for taxes, and the operating expenses are more than double of what an efficiently run company should be spending. So what needs to happen is that clearly the company needs to cut costs and run smarter. They need to work to be able to get their operating expenses down to $13,500 on an annual basis. Another opportunity to make more profit and owner's compensation is to reduce the materials and sub costs, which cutting these costs will reduce an additional money for real revenue that would make more money available to allocate to profit, owner's comp, tax, and operating expenses. Click to follow more for Profit First FAQs. Please tag or share this post with an attorney who's recently expressed their frustration about their unpredictable cash flow, lack of profitability, or inability to grow. I'd love to help them profit, scale, and thrive.